It bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
These are volatile times in the stock market.
Market's up 200, then it's up 800, it's up 700.
How do you get the facts when investing?
Hi, I'm Phil Grande at philsgang.com. If you're confused about the stock market, get unconfused. Go to my site, philsgang.com, and listen to my radio show every weekday at 3 Eastern. What is the market going to do? We know exactly what the market's going to do.
Phil's got the answers at philsgang.com.
There's no need for you to be losing money.
Check it out, philsgang.com. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
The reality is real wages are an all-time record high.
Afternoon. Okay, I am Phil Grande. This is my podcast. I want to point out something very important. What does the 1929 crash have in common with the crash that's coming? Now, don't throw stones. Every time you mention a crash could occur, everybody throws stones at you. Take a look at this chart, okay, and try to be, neutral here. Let's take a look. In 1929, that's the brown part. That's the stock market. See how it went up? And then it peaked right here at the top, then it dropped. Now let's take and overlay today's market. Same thing. And it's right exactly where it was when it crashed in 1929, that stock bubble. Isn't that interesting? Now, does that mean it's going to crash? I don't know. But when I look at my indicators, and certainly the bond market is one of the greatest indicators. It's telling me that we've got a very high probability of a crash that's going to be coming within the first 2 quarters, or at least a correction, a severe correction within the first 2 quarters of 2026. But it's not about being right or wrong. That's not how the market works. If you know how to sell short and you know how to go long, there's no right or wrong. It's following the money. So you're prepared for the direction it's going. Anyone that can sit there and tell you, the crash is going to be 10 minutes after 2 on Monday, January 3rd, 2026. No, nobody's saying that. But if you look at the information that's given to us, especially the bond market is so reliable, it's never wrong. It's telling you something's wrong in this market. Look at gold, how gold went up. Mining, 92%, something's wrong. China, Japan, England, they're not buying our treasuries. They're not going to loan us money. Trump's out there scrambling, buying T-bills for short term because he can't get loans from the 3 banks, China, Japan, and UK. because they want to buy more gold. They don't want to be involved with our debt. And here's the other thing that's really interesting. The jibber jabbers on these TV shows are unbelievable.
We're in a pretty good place. The U.S. economy is gliding into year end.
You believe that? I mean, what the hell is he talking about? Then he says, real wages are great.
The reality is real wages are an all-time record.
I mean, this is amazing. That's why, again, if you listen to these jibber jabbers on these TV shows, they're not going to give you the truth. That's not their job. Their job is to get you to buy. 90%, go to the people. Go to the people. Ask the workers. I remember when I was in the land development business years ago, and land development. I used to buy companies, and I used to turn them around. And people would hire consultants. They paid thousands and thousands of dollars. I'm buying this company in Chicago, blah, blah, blah. Tell me what you think. Give me all the demographics. I'd go to a cab driver, and I'd have him drive me around Chicago where that plant was, or Boston, because you go to the people. They know the truth. I never hired a consultant when I bought a company. The company I was going to turn around, never. So it's the same thing. You go to the workers. What do the workers tell you about wages? 95% are saying paychecks are no longer keeping up with the cost of living. Sure, eggs are down 29%, but coffee is still up 14%. Meats are still up. I mean, there's a lot of things that are still up. Shelter's up. But anyways, the guy on the street, the workers, they're making tough choices. They can't, when they go to the supermarket, they're putting stuff back. Their savings are down. They're pulling their savings are tapped. Their savings have been so low. What's this guy talking about? We're in a good place. The only people who are in a good place are the very, very wealthy who control the stock market. They're making a fortune, and they're buying the same 7 stocks. That's going to change soon. I just showed you what's going on with the stock market here, right? Now, so again, don't listen to these geniuses. It's just unbelievable, okay? It's just unbelievable. So, all right. So let's move on. So the national debt's $38 trillion. That's 123% of GDP. We have, again, corporate debt. Bankruptcies are up 42%. What's he talking about? That's a good place. Who wants to be there? 22%. Think about this. Corporate debt, 22 trillion. That's 69% of GDP. Household debt, 21 trillion, 67% of GDP. That's being in a good place. Well, I know you're not in a good place when China, Japan, and UK are dumping $80 billion a month in stocks. I mean, in treasuries to buy gold, and they won't loan to us. We have the worst fundamentals in the stock market ever. We got the worst concentration. Everybody's buying the same 5, 7 stocks. Worst breadth. I have a chart on that. Let me see if I can find it for you right here. Here you go. Look at the breadth chart. Look how bad this breadth chart is. We got the worst concentration, the worst breadth ever in this market. And that's good. That's what does he say? Everything's great? Or we're in a good place. We're in a good place. Is that being in a good place? We got a problem. It's the worst market breadth ever. I mean, that's crazy. And then the treasuries, they're going to can you believe this? I told you last week this was going to happen. I told you in the last couple of weeks, I said he's going to cut QT. He's going to stop QT. He shouldn't stop QT. Tightening. We still haven't gotten rid of the inflation. We have not hit Powell's goal of 2%. We're at 3%. He's supposed to hit 2%. And he's going to stop with QT? What's he, absolutely nuts? Tightening? You got to keep getting this liquidity out of this market or we're in big trouble. And then what do we hear today? What's he doing today? He says he's going to, in the next 2 days, he's going to expand the money supply by $300 billion. Well, if we're in a good place, why do you have to expand the money supply by $300 billion? That's a contradiction altogether. What are you, nuts? $300 billion liquidity he's going to be putting in the next couple of days? or I shouldn't say next couple, between now and December? For God's sakes, that's ridiculous. That's terrible. That's when you start doing that, when you start hurting and you got to increase the money supply, you're in trouble. You're in big trouble. That's what it's telling you. I'm telling you exactly what it tells you. When you increase money supply, your economy, you're stressed out. Things are not good. Things are not good. And so again, Powell. So he stops with QT. Now, what is QT? QT is, again, you curb inflation. How do you curb it? You reduce the money supply. Take that money supply out. The good thing is you have a strong dollar. So when you import goods, you're in good shape. But you reduce the amount of treasuries on the Fed's balance sheet. They've been reducing it $60 billion a month. That, in turn, reduces the amount of supply, the money supply. The dollars come out. The dollars come out. And that gets rid of the inflation. We need to get rid of that inflation. Because, again, when you pull that, when it reduces that money supply, the amount of dollars in the economy, causing a demand for dollars. See, so what happens, you get a demand for dollars. When you start pulling it out, now all of a sudden there's a demand for dollars. That causes yields to start rising. The dollar gets stronger. But this is what we got to keep doing. Not turn around and do QE. That's what he's doing by putting $300 billion in. He's masking doing QE. That causes inflation. That causes a rally. That's what he wants. He wants a rally. He's trying to keep his job. He wants a rally. This is insane. So he's wrong. Powell is dead wrong. $300 billion between now and December? He's nuts. He's wrong. His target is 3%. His target's 2%. We're still at 3%, so why give up? Now, remember, 45 months he's been dumping for 45 months, $60 billion a month. He still can't get down to his target of 2%. So now he's going to turn around and he's going to start flooding the economy with money. Here's what he's going to do. He's out of his mind. He's saying, yeah, but if I put money into the system, that's going to be a good thing because now consumers can start consuming again. They can get cheaper loans. That's the last thing you want to give them. They're struggling. I mean, have you ever heard anything so stupid as this man? So inflation's not down. He's going to inject more liquidity, which is QE. It's just he'll come up with a name to mask QE. He'll call it the financial turnaround or something. You know, all these names. I'd like to find a guy who does get all those names. He's a genius. So consumers are struggling. They have record household debt at $18 trillion. Bankruptcies in small businesses are a record now 47%. Bankruptcies, consumers, households up 27%. You got record auto, credit card, or mortgage delinquency. You got a record affordability gap at 57%. In other words, if you take all of the expenses related to your home, they've increased from 30% to 48%. So now when you go to buy a house, you got an affordability gap of 57%. You can't afford a house. House is over $400,000. You got to have $125,000 in wages to buy a house over $400,000. That's insane. So they're saying we're in a good place? What's he, nuts? Now, the consequences of increasing the money supply. Now, at first, it seems great. The Fed lowers the short-term Fed rate. Oh, and by the way, remember what I'm telling you. There's no guarantee. When he cuts this rate in December, everybody's all excited. All the FOMOs have jumped in on Friday, bought all the stocks, all the tech stocks, all the AI stocks that were dropping on Friday. They went in and they started to buy those stocks, again, with margin money. To run those stocks up, they're going to get killed. But remember, at first, the Fed when they put the money in, the short-term rate comes down first. The Fed's short-term rate comes down first. And then they're looking for the long-term treasury rate to come down, because remember, the long-term treasury rate, that has to do with your car, your credit card, your business loans, mortgages, all that. So they put the money in, and yes, the Fed rate does come down first, which brings down the long-term treasury rate that helps you with the auto loans, credit cards, business loans, all that. But it doesn't last long, because as soon as you put that money in, you push that money in, there's a demand for money. It starts. So that initial push of money in, again, the Fed rate's going to be down, but your mortgage rates, the long-term interest rate, which we're concerned about, that's the one we want. The short-term rates, yeah, that's important. They loan to the banks at a certain rate. But, we're concerned about our car payments, our mortgage payments, business payments, all that, right? So the big problem, as soon as the demand for the money starts, the long-term treasury interest rates, they go back up. They go back up. So, yes, they stay down for a while. Fed cuts, they go down. 10-year treasury goes down. But then as people, rates are down? Oh, rates are down? Let me go to the bank. So Powell thinks everybody's going to go to the bank now and they can borrow more money. Are you kidding? They can't pay their student loans back. Their home mortgage delinquencies, highest in 17 years. Their car payment delinquency, highest in we haven't seen that in 33 years. Their credit card delinquencies, the highest in 30 years. Savings, the lowest in 30 years. And he says, oh, this is going to be good for the consumer because he can go borrow money and he'll go consume. What the hell? This guy is an idiot. Our inflation's still not at 2%, it's at 3%. Now let me explain. Remember on September 18th, 2024, remember we had that big, we're going to cut rates, we're going to cut the Fed rate. They haven't had a rate cut in, I think, a year and a half. We're going to cut rates, the Fed rate's going to cut. And that 10-year treasury's going to drop. And what happened? They cut the Fed rate, and then what happened with the long-term rate? What happened, remember? Well, I'll tell you when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color-coded chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
We're in a pretty good place. The U.S. economy is gliding into year end.
The reality is real wages are an all-time record high. Consumption per household is an all-time record high.
You'll see these little bubblets break, things in gold, things in Bitcoin, but it's unlikely to take the rest of the market with it when you have
Okay, welcome back. You have to rack that back up. Okay, so let's talk about what's going on here. They want to convince us everything's wonderful, the economy's good, more people are working than ever before. None of that is true. But as a trader, as an investor, I don't care what's true, what's not true. I do, in a sense, of course, I want to know what's going on in the economy. I have to know what's going on in the economy for long-term investing. Okay, but to be a position trader where you're in a stock anywhere from, let's say, 3-4 weeks, okay, or let's say average 2 weeks to an average of about 8 weeks, I don't care. I want to follow the money. But yes, it's important to know this. It's important when they're lying to you. I mean, when they come out and keep telling you how wonderful everything is and we're going to get rid of QT, getting rid of QT is so stupid. It is stupid. That's like if your car is near empty, you're at a gas station, you put in your nozzle and you decide not to fill it up. And you got to go the next 100 miles before you hit another gas station. That's pretty stupid, isn't it? It's exactly how stupid they are with, again, increasing money supply. Look at this. Look at this. $300 billion they're going to put in. Now watch this chart here. I want to show you another chart. This is crazy. Look at this. Do you know how many companies have been delisted? 32%. 32% of the companies have just been delisted. They're no longer publicly traded companies. 32%. Why? And what are they doing to make up for that? Instead of Wall Street doing what it's supposed to do, instead of Wall Street, their job is to increase the money supply to increase business investment. But we haven't increased in business investment since 2008. When you increase in business investment, yes, increase the money supply. Give the money to business investment. Then you go out, you buy IT, you buy new equipment, new machinery, you expand your facilities. Your productivity increases by 2-3 times. That means your wages start going up because your profits are going up. You're hiring more people. You can put them on a pension. You can give them a good package. But they don't do that. They haven't done that. They use the money for stock buybacks, and that's what he wants to get back to. That's what they're going to do. They're going to go back to stock buybacks. What else? Why else would they do that? Now look, so by reducing the amount of public companies, people just said, I don't want to be public anymore. And look what's happened. The stock buybacks have shot up. So what's going on is the stock buybacks is making up the difference. The stock buybacks is pulling the market up by its bootstraps. It's not going up because we're increasing productivity. It's not going up because out of that increase in productivity, we have increased wages. We have good full-time jobs with good pensions instead of these stupid 401ks. And by the way, yes, we are going to get a crash at some point or a severe correction. And I'm begging you, if you're in a 401k, learn how to hedge that. We're doing it here at Phil's Gang every day. We'll show you how to do it. So when you're sitting there and we get a 30-40% crash or worse, you're going to sit there and just watch your 401k go down, and they're going to call you a broker. What's he going to say? I'll tell you exactly what he's going to say. Come on in and we're going to rearrange your portfolio. We're going to put you in some more value stocks, defensive stocks like Coke and Colgate. That doesn't work. There's no place to hide. What's he, stupid? But that's what he's going to try. Next thing he's going to try is, well, we're just going to take and cost average down. Let's see here. Let's take a look at your stock. Okay, your stock was at $450. It's now down to $350. We're going to buy more of it. Isn't that great? We're going to buy it for $350 instead of $450. Then it goes down to $250. We're going to buy even more now. It went from $450 to $250. We're going to buy even more. We're going to cost average it down. Those guys should be in jail. Anybody that does that to you, that tells you we're going to cost average down, they should be in jail. That is the dumbest thing in the world. Would you do that with anything else? Buy more of it? I mean, would you do that with I can't think of anything you would do that with. The value goes down and you're going to buy more of it. So you go to the grocery store, you come out and half the vegetables are rotten. Oh, we're going to give you a discount. I don't want a discount. I want new vegetables. I tell you, this is the worst thing ever, this cost average down. That's what they're going to do to you. You watch. They're going to do that to you. So this is a terrible thing because they're going from QT, which was a good thing, to QE, which is a bad thing. And what they're doing, and instead of taking that money and put it into business investment to increase productivity, this nation was a great nation by increasing productivity. Now, our president, Trump, wants to increase manufacturing back here in the United States. It's not going to happen. It's not going. I mean, let me back that up. It's going to happen, but it's going to be 10 years before we see that. Do you know how long it takes if you're, let's say you're Wrangler jeans and you're in China, which they are, and they make their jeans, right? Do you know how long it would take to move your company from China to California or China to New York? You got to be somewhere where there's a port, right? And try to get a permit. Try to get a permit to build your factory. You know how long it would take? Imagine California. It'd take you 10 years before, by the time you went and applied for that, even do 5 years is stupid. Do 10 years. Take you 10 years in California to build that factory. Boston would take you about 8 years. New York would take probably 8 years, 7 years. Because these are all liberal states, and they got all the environmentalists, all the granola bar eaters, you know, the women, you look at them, they come into your office, they got hair under their armpits and John Lennon glasses, and their Volvos parked outside. They're usually green and dirty. They're going to give you all kinds of hell, man. You try to get a permit, it's going to be a tough thing to do. So you think this is going to be overnight? It's not going to be overnight. So again, this is really, really bad deal. Yeah, let me play another cut.
Obamacare insurance policies have doubled in price relative to normal policies. And so the fastest inflation in the economy is these big government subsidies thrown at Obamacare insurance.
Exactly correct. See, people don't understand what happened with Obamacare. Obamacare was a fraud. He's a fraud. What happened was, remember when Pelosi said, well, get it passed so you can see what's in it? What? What the hell was that? But everybody fell for it. Nobody could sell like Obama. That kid, I'll tell you, I'll never forget the night he got up there and he made his speech. Nobody knew who he was. I said, oh my God, he's going to be the next president. Look how smart this young man is. Turns out he's phony. That Obamacare has destroyed us. Because why? Because where's the money come from Obamacare? Let's say each policy is losing, just for sake of argument, each policy is losing $5,000 a year. So you don't have to pay that $5,000 if you pay your taxes, if you pay a federal income tax, that federal income tax is going to Obamacare. What they're doing is if you're, let's just say for an argument, it's costing you $5,000, okay? Your policy's $5,000 overpriced. You never see it because the federal government will take and loan that $5,000, or give it, not loan it, give it to the states. And that's how they've been masking it all these years. That's why inflation's up. One of the biggest reasons inflation's up is because of Obamacare. But let's get back to the stock market. So what's going on is this. If you look at the stocks today, everybody's getting fooled. If you go down and look at, remember the tech stocks are getting really hit hard, right? The tech stocks are getting hit very, very hard. And the bank stocks were doing well. But now the bank stocks right now, they still have a chance, even though they pulled back. Listen to what I'm telling you. The bank stocks are pulling back. They're pulling back. But they still have a chance of making a new high, as long as you get some money coming into these stocks again. You need a big burst of money. They're not over with yet. They're still on their last leg. They could turn and run. My favorite, JP Morgan, which we made a ton of money on, okay, that stock can get right back up to 318 from 290, like nothing, if money keeps going in. So they're not dead yet. But the scary thing, if you take XLF, the ETF, okay, XLF. So you put down XLF, pop it up, that's the ETF for financials. The scary thing about the banks, they already broke the 50-day moving average support. So if they break the 200-day moving average support, I'm talking about the ETF, you got to watch your ETFs. If that breaks that 200-day moving average support and it's really close to it, these banks will collapse. Now, here's why he's saying here's why he wants to do that $300 billion. Because the banks are in deep, deep trouble. Remember the last week of October, a Friday, they had to go and borrow, they begged Powell to put a pool together of $50 billion to save the banks. They're in the same position they were in 2008. They had no money. They couldn't loan to each other. Well, in 2008, you know what happened. We had the biggest crash ever because the banks couldn't loan to each other. Well, they stopped that. They plugged that hole up. They got the Dutch boy in there, his finger in the hole, keeping the dike back, the water back. And they're doing that by every time there's a problem now, they learned their lesson. So to avoid a crash, they'll go to the big institutions, insurance companies and wealth funds, and have them put in a pool a bunch of money so that the Fed now could take that money and give it to the banks. He is scared to death. He is scared to death. So what he is doing, okay, and what he's doing now, he's going to put a whole bunch of money together. That's what he's going to do, $300 billion, to prop the banks up, He's not going to be able to do it. He's not going to be able to do it. So if you look at the only thing that's holding this whole stock market up right now is a couple stocks. Johnson & Johnson, Lilly, that's it. And if you go, so I'm going to buy Coke or I'm going to buy Coke, forget it. You're not going to make money with those. The only stocks that are doing well right now is your health care, okay? Just your Johnson & Johnson, your Lilly, and a couple more stocks like that. Those stocks are in Johnson & Johnson. So we got a couple of stocks in that group's doing well. But if you look at everything else, I just went over the bank stocks. They're hanging on by their fingernails. Tech stocks are dead. Okay, what Trump what the Powell's trying to do, he's trying to push those tech stocks back up through QE, but he's not going to call it QE. Okay, he'll change the name, but that's exactly what he's doing by increasing the money supply. It's the same thing as QE. And QE, remember, causes tremendous inflation. It'll cause a rally, all right, but it'll cause all kinds of inflation. The dollar's going to get weak. All that printing of money, and again, so the QE was a total failure, because all the QE did was it gave money to all QE is, they print all this money, they go to the banks, they say, give me all your assets, your mortgage-backed securities, give me your deposits, give any assets you have, okay? And now you got cash. I'll give you cash for your assets, okay? But we don't want you taking that money and giving it to small businesses on Main Street. We don't want you loaning much of that money out for housing. You can, but not much. We want the majority. We want 85% of that money we're going to put in there. We want it all going to our stock buybacks. That's what they're going to do.
30 seconds.
But you got to remember, they can backfire. Just like, for example, everybody thinks because he's going to cut rates in December, the 10-year Treasury yields are going to come down. No, it doesn't always work that way. 2024, remember, he cut the Fed rate by 75 basis points. Remember that? Or by half a point. It was a big cut. And everybody's sitting there waiting for the 10-year Treasury yield to drop. It went the opposite way. That's why you got to learn how to follow the money and know how to short like you know how to go long. We'll help you with that. Check it out, philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.